Are you? You know what? We need some water. I'm getting some
Yeah, water.
I didn't go to Costco.
Coffee?
Coffee.
Welcome to Coffee with Conroe.
Yeah, welcome to Coffee with Conroe. My name is Trey Melcher. I'm the general manager here at Palm Harbor Homes here in Conroe. Homes of Conroe are platforms that we have. I want to thank you for joining us. I'm here with Karina Alvarez with Good Credit for Life. As a starting point for our YouTube videos, we wanted to do informational videos and things like that for our customers, just to give them a different look at what we can do for them. We thought that a good starting point was where customers have to start with themselves, and that's typically with credit, along with jobs, income, things like that. So we're going to start with a little coffee. Here's
That's
to
right.
new venture here. Appreciate it. So just some questions that we have, Karina, and I'll allow you to ask us some questions, but most of our customers basically want information and coming in here, and a lot of them are just scared to death, starting out. The biggest way that we can help them in getting started is basically finding out what their buying power is, what they're capable of doing based on finance, because that's 90% of them are going to finance their house, whether they're putting down a small down payment or a large down payment. So we've asked some customers to give us their biggest concerns, and then I've asked some of the salespeople here to give me some questions that they've been getting. So just before we start though, I'm kind of curious how long you've been doing this, how'd you get involved, and just tell us a little bit about your company.
Yeah, so I've been in the credit repair industry for a little over 6 years, and I specialize in mortgage approval. So I mainly work with people that are trying to buy a home but don't qualify. And like you said, with the whole process of buying a house, the very first step is seeing what you qualify for, and that is your credit, your income, and your savings, pretty much. And then with that, you're able to see how much house you can shop for. So credit is definitely a huge part of the home buying process, and it's where to start, which is why we're here today. But yeah, to your original question, it's been a little more than 6 years, and I love it. I love helping people getting approved for a home.
Okay, and you started this in, was it San Antonio area, Austin? Austin area.
Mm-hmm.
Okay.
Yes.
Okay, and how did you come to the Houston area?
So I came to Houston to expand and to open a second location. I was doing some nonprofit work, and the nonprofit work led me to helping people that had been affected by Harvey, and it just happened to be at the same time that I was coming to Houston, so it ended up being perfect.
Okay, and then happened in here. I know you've dealt with some other Palm Harbor.
Yeah, so I actually work with pretty much all the Palm Harbors in the company, especially the ones in Texas and Oklahoma.
Okay, great.
Yeah.
Well, I'm glad that we got to grab you first on this deal.
Yes.
And we've got some literature here. How does somebody contact you directly if they want to do that?
So my information is on one of these brochures. If you guys come in, we have a website, which is goodcreditforlife.com. My phone number is on the brochures and on the website. There's an office number, and my cell phone number is on there as well.
Okay. Is there an application process or anything that they have to go
No. So the consultation is always free. If you have a copy of your credit report, awesome. If not, I can help you get one, and we can do an actual credit consultation over the phone and go over everything. If not, I'm happy to just explain the way that the program works as well. But the consultation is always free. There's no application. And then once somebody's ready to enroll, the enrollment is super easy. It just takes a couple minutes and can also be done over the phone.
Okay, great. So just some questions that we have in general. If you have any for me, feel free. But I guess the easiest thing to do is just to ask you some of these.
Yeah, please do.
Because not only for our customers' sake, but I'd kind of like to know how to answer some of the questions that we have. We use our own verbiage. Sometimes it works, sometimes it doesn't, to get them. And we just want the customers to know that we're not trying to put them in a bad situation for housing. We're not going to do that as far as taking a look at credit and things like that. We're just trying to find a way to give them more information, if you will, because that's what they come in here initially for.
Right.
So, but a lot of them come in, they say, well, I know my credit now. I know what my credit score is, and they'll typically give us one score. And you know, there's more than one score based on the different credit sources, but Credit Karma, freecreditreport.com, things like that. So what would you say to those people who are using that as their own source because they don't want to give us as salespeople too much information?
Right. So there's a couple things on that. One, to have something like Credit Karma, I mean, it's better than nothing because you have a general idea. But unfortunately, those applications, they're free for a reason. So they're not very accurate. So that's something to keep in mind. And two, I feel like what you're suggesting is that people want to give you that score because they don't want you to run it themselves. And you know, that comes from a fear that it's going to drop their score by checking it. Can an inquiry drop your score? Yes, it can. But it's really only a huge impact if you're out letting multiple people in a day run your score. If you're serious about home shopping and you want to see if that's a possibility for you and what the next step is, then you absolutely need to know where your credit stands, and you need to have the person that you're talking to run it. So consumers should definitely not be scared to let you run their credit whenever they come in, because if they're serious about the possibility of wanting to buy a home, then that's absolutely the first step, is knowing what their credit is so they know if they qualify, and then what that means, you know, interest rates and all that, and if not, then what they need to do to get themselves there.
Okay, and saying that, you know, going to different places and allowing other sources to view credit, is there a difference between having, like, let's say you're going to a car dealership, you're shopping for an automobile. Well, they have to, it's the same thing. They have to pull credit, they have to take a look at your credit. They have a number of sources that they can use for financing for you, and they're always trying to you know, give either themselves because of finance or the customer put them in a better position. So in shopping your credit for different terms, shotgunning your application, things like that, in the auto industry, would that be the same as somebody going to maybe a cash loan place that's running your credit and then jumping on credit cards? Or are they two different algorithms or something that's going to deviate from how much the score drops?
So I'm glad you brought up the car dealership thing, because that's its own animal. When it comes to inquiries, which is what it's called when somebody checks your credit, car dealerships are the worst. So that is actually where this idea that having your credit pulled will drop your credit, that's where it comes from. Because usually when you car shop, they send your application to everyone that they have a financing relationship with, which means that you are getting 10 credit checks in one day, and that's what will make your score drop significantly. Okay. So that's the difference.
Is there, and I don't know, I've never sold cars, I've been in the car industry, but I understand or been informed that maybe they get a, you know, based on who they're using, they have a monetary position in the finance. Is that true?
I'm not sure. Okay. Yeah, I'm not familiar with that.
Okay, so it is different, say, because I've also heard through mortgage companies that when you're shopping for a house, it's a little more delayed process. It's not an instant process like going to car, you pull in a car dealership, you know, these several people look at your credit, and then you can be, in a couple hours you're leaving with the car.
Right.
There's more of a process with what we do. Of course, a lot of times, more times than not, you're ordering a home, so that it's a longer process. Right. So they allow, or I'm wondering if you're aware of this, that they allow you a grace period of allowing other mortgage companies to take a look at your credit.
Yes, there's supposed to be a 30-day grace period when it comes to home shopping, where you can have multiple inquiries, mortgage-related inquiries.
That won't affect that credit score. Okay. All right. Another one is you know, we were talking before we came in here about collections. What's the truth about collections versus new collections versus older collections, and that being said, what is considered an older collection?
So, there's a lot of myths when it comes to credit. Collections is probably one of the biggest. First of all, the biggest myth with collections is that people think that paying a collection automatically removes it from their score or from their credit report, and that's actually false. It actually makes it stay on there an extra 7 years. So the statute,
An extra 7 years.
an extra 7 years, an additional 7 years.
Huh.
So the statute of limitations is 7 years when it comes to any account on your credit. And they go off of the date of last activity, the date of last activity being payment. So if
Okay.
you have something that's 6 years old and is getting ready to just fall off on its own because of the age of the account, and then you pay it, then you're starting that clock over.
Wow.
And paying it doesn't remove it, it just changes it to a zero balance. So you still have that negative account because it's a collection. A collection is a negative account. It's still on your report, it's still hurting you. The only difference is that now it's a zero balance.
Okay, so you've just kind of activated something that was dormant.
Exactly.
Okay.
Exactly.
Okay, well that's interesting, and that's something definitely we can share with customers, and giving that information ahead of time, as long as they allow us to review credit.
Right.
Okay. So what are some things from your standpoint? Do you deal with mortgage lenders at all, and do you? So what are some things that they tell you that they're focusing on within the credit? Is there a number of collections that they look at, or how many active accounts?
Well, not necessarily. The first thing that they're looking at is the scores. And we touched on this a little bit when you were asking me about Credit Karma and those things, if people come in with one score. So there's 3 credit bureaus, which means that there's 3 credit scores. And they go off of what's called the mid score, which is going to be your top 2 scores. Doesn't matter which bureaus they are. And then that's going to be the first thing they look at. Once they see that you have an actual score that qualifies, then they're going to look at like your expenses, and that's when they'll look at how many accounts, what's your monthly expense, or what's your balance. They'll look to see with credit cards if your balances are too high, and then they'll also look at collections if there are any, because if there are, then they have to factor that into your monthly expenses.
Okay. Now, when you take on new credit, somebody goes and buys a car. Regardless of the amount, could be 20,000, 30,000, 40,000. I've seen, just in my own experience in buying a car, you go in and they give you your finance program based on your current score. But immediately after you take possession, and maybe you go make your first payment or something like that, you look at score again. It happens to customers too. The score comes down from where it originally was when you opened your finance package. So I'm assuming that's just in my relationship with the different lenders in our communication. When you do that, you've taken on new debt, so it is going to adjust your score. Is that accurate?
Yes, absolutely. So that actually ties into another big credit myth, and that's that people think that to build credit, you should open a loan, and that's false. If you want an account to help build credit, credit cards are better than loans. And the reason is that with loans, you are taking a large amount of debt on. So 35% of your score, which is the largest amount of your score, is from amounts owed, is from your debt owed.
Okay.
So
35%.
35%.
Say that again. 35% of your score.
35% of your score.
Okay, is based on your amount.
Your amounts owed.
Amounts owed. Now, amounts of loans, or your total amount of debt?
Total amount of debt.
Okay.
That's on your credit report, of course.
Okay.
If you've got a car loan that's not reporting to your loan,
Right,
then that's
it's
not,
not
or to your
affecting.
credit report, that's not going to affect you. Yeah.
Okay. So, what is the time period for that car payment, or that loan that you've taken on? What is the time period, and is it based on months, because that's how the credit reports are reported? What is the time period before that score starts to go back up to where it originally was?
So it depends because there's so many factors that go into your report, but it's definitely something that's long term. That's why, you know, loans are known as installment accounts, which are something that's long term. So that's how it's going to go helping you. The second largest part of your credit score is payment history, which is another 30 some percent. And so those two go hand in hand. The longer positive payment history you have, the more that's going to help you go up. And as you're doing that, you're making the amount owed go down because you're making payments on it. So together, the loan over time helps you, but it's gradual. It's not immediate.
Okay, is there certain accounts that you have to have? Like installment accounts, so many installment accounts. Do you have to be a homeowner to reach a certain level of score? I heard at one point you can't have above 800 score if you don't have a mortgage on it.
That's not true.
It's not.
I had a previous client who she's one of our best success stories. She went from the 500s to the 800s.
Oh, wow.
She ended up, I mean, barely 800, but she was an 802, and she hadn't bought a house yet.
Well, what did she have that was that showed that improvement? That was one of my questions that I had for you was what's the biggest spread in score you've seen? And that sounds pretty. I mean, that's 300 points almost.
Yeah, it was high 500s to low 800s, so it was more like 250.
Okay.
You know, right under 300, but yeah, it's the largest spread we've seen.
Yeah, that's pretty broad. And I've seen customers, just on my knowledge, I've helped customers because of what I've had to do in buying a house for me and my wife is that, you know, what we had to do, you know, getting small credit cards and, you know, just keeping a low balance on it and then, you know, paying some debts off, not paying them off, paying them down. Even I understand that's kind of something that you got to be careful with. Don't pay all the debts off, but pay them down.
Correct.
What's the reasoning behind that?
So with credit cards, which are known as revolving accounts, it's better to have a lower balance than a higher balance, and it goes back to that percentage of amounts owed. So that's the easiest way to manipulate your score either up or down is by having your credit card balance low. Because if it's high, then you're using like the majority of the credit that's been extended to you, which looks bad, right? And you're increasing the debt, so you're affecting that 35%. Whether if it's a low balance, then you're affecting that 35% in a positive way.
Okay,
Does
so
that make sense? I know it can be
it does get confusing. The only reason I understand a little more is because I've actually experienced the success of it and doing it. So the way I understand it, it's better to have the credit and not being used.
Correct.
Than to actually using the credit because of those percentage, markers. So in a credit card, what are those percentage marks? I heard 90%, 10%, 50% affects
the lower the better. I always tell my clients about 10% of the limit. Okay. So if you have $1,000 credit limit, then you don't want your balance to ever be above $100.
Okay, now I don't want to call it a trick behind that, but just recently, me and my wife were buying a Palm Harbor. Go figure. Putting it on some property we have. So I was between some categories with my score, trying to get it a 2-point difference because of the program that was offered, which is very important. So I went as far as contacting the bank. So because at one point I paid the credit card to a certain percentage that was recommended, I believe it was below 30%, to get the activity to move that score up 2 points, okay? Well, it didn't happen. I did what I was supposed to do and I was a little confused. So we waited another 30 days and, it got to a point where we couldn't wait anymore. So he said, man, why don't you just call the credit card company, which I did. So I contacted them and I said, look, I need to know when you're reporting because I've made this payment, I brought it down to the agreed amount, and there was nothing happened when we went back and looked at the score, because we had to do that. We had to go back and look at the score. And they told me, they said, well, being that we only report once a month, as the creditor, they have a cutoff date. So, and this particular date on this credit card was the 14th of the month, and the time was midnight. So he said, it doesn't matter what time you make your payment. If you make it on the 13th, you make it on the 14th, but at midnight, what your balance is right. What's reported.
That's exactly right.
Okay, so he said, now that doesn't mean when you pull your credit on the 15th that the creditors have already updated it. I mean, or the credit bureau has already been updated. And I found out by contacting the credit bureau that sometimes it could take up to 7 days from the time that they get that report from the credit card company. Right. So we played with it the next day, or the next month, I'm sorry, and it worked. Yep. It worked. I made sure on the 14th that it was at a certain point, and then we actually waited 10 days and then re-pulled, and that score went up. I think it was 22 points.
Credit card balances make a huge difference.
Yeah.
Absolutely. And that's something that I stress to my clients repeatedly. And that's the same advice that I give them as well. You know, I'll get after them about having a high balance, and they're like, but that's not the balance. I'm like, well, it's because it doesn't update daily.
Right.
You know, and that's something that they sometimes don't understand. And I've told clients before too, call the credit card company. If you're paying down that balance every month to 10%, but it keeps reporting as a high balance, then find out when it is that they're reporting it, because they're obviously reporting it before it's been paid down. So I've had several clients do that, and it's worked for them as well.
Have you found that some credit card companies don't even report every month, maybe every other month?
No, every month.
Do they?
Yeah, I haven't found anybody that does every other
That's
month.
Interesting.
Yeah, because of the billing cycle.
Okay. And we've had some great successes just from our standpoint of seeing this and having the little experience I have with my own, but and seeing this, and they're all maxed out. So when they're all maxed out, they got 3 credit cards, one's 1,000, one's 3,000, one's 5,000. If they're all maxed out, what happens?
Well, having a maxed out credit card is terrible for your score. So it can actually drop you 80 plus points.
Wow.
That's a lot.
Wow. Okay.
Yeah.
That's interesting. What about late payments?
Same. Late payments are probably one of the worst things for your credit. So the reason that your credit score exists is so that people, like lenders, can decide if you're credit worthy, decide if they should lend you money, if they should extend this line of credit to you, and how likely you are to pay them back. That's the reason credit exists. And one of the biggest indicators for people if they shouldn't lend you money is late payments. So because of that, it has a very big negative impact on your score, as much as 100 points.
You know, what do you offer to people? You know, a lot of times, you know, bad things happen to good people, right?
Absolutely.
So, you know, life happens.
Life happens, exactly. That's what I always tell them.
and during that, you get negative things, whether it's due to a loss of job, you know, family separating, you know, relocation, whatever the case may be. But in that period, you have a repossession, or you know, you maxed out a credit card and didn't make payments for 90 days, so they canceled the credit card, and it shows a charge off, or even maybe a bankruptcy. I mean, what do you say to people that have those major issues? Can you help them?
Yes, we deal with that all the time. Bankruptcies, foreclosures, repossessions, judgments, tax liens, those are all things that we can get removed. When it comes to foreclosures, bankruptcies, and repossessions, we do prefer that it's been at least 2 years since it's happened. There's a higher probability of it coming off if it's a little bit older rather than if it's fresh. Doesn't mean it still can't come off if it's less than 2 years. It's just not as likely. It's more of a 50-50 shot at that point.
Really? Now, what kind of timeline and process would you say to your customers or your clients coming in that maybe we refer them to you? what's a good idea of time to overcome something that large?
So with our program, we actually have a money back guarantee, and it's guaranteed in 6 months. So what we guarantee is a minimum score of a 620, which is the minimum score needed for mortgage approval for some programs. And as long as those items that you mentioned, like I said, are older than 2 years, then they qualify for the guarantee. So it shouldn't take any more
Really?
than 6 months.
Okay, well that's promising in itself. Now, we talk about guarantees. Do you finance this process at all, or is it a one?
Yeah, so it's a flat rate cost for the program, which is $850 for an individual and $1,400 for a couple. So you do get some savings when you're doing 2 people together, and you pay that out over the 6 months of the program. Now, you see results every 2 months, and a lot of people are ready in the first 2 to 4 months. It doesn't even take the full 6 months for some people. But we do allow the 6 months for the best results and for the money back guarantee. And the reason that we have it set up that way is because there's a lot of credit repair companies, and unfortunately the majority of them don't do a very good job. And one of the reasons is because they're based on a monthly payment model, and it's more of a smaller monthly payment. And so unfortunately, they're not really in any rush to fix the consumer's credit because they want to get that monthly payment for as long as possible. And so
Right.
you'll see people in these programs and it's been a year, even 2 years, and nothing's really happened because they've been dragging it out. And not just that, the type of disputes that they do are different, where they result in temporary deletions. Temporary deletion. So they'll get something to come off, and then 60 to 90 days later, it's back on their credit.
Really?
And if you're 60 to 90 days from closing on your home, and then that thing goes back on,
It'd be a big surprise at the
yeah,
end.
exactly. And then you're not closing on your house.
So, do you have customers that come in that have already been through a type of
Yes.
credit repair?
Yes, all the time.
And obviously, there's some mistakes made along the way.
Yeah, so that's what they encounter is, something that had come off, so they thought, and then came back on, or what I was explaining, they're with a company that's based on a monthly payment, and so I see that all the time where it's been a year and they're like, nothing's happened.
Okay.
Which is unfortunate for them, and that they've spent that money and wasted that time. So again, that's why we designed it to be 6 months flat rate. It's not going to take more than 6 months, and it's not going to cost more than the $850 or the $1,400.
Have you always been successful? Is with that 6 month time period?
Yes. So the reason that we offer a money back guarantee is because we can back it up. But it has to be a joint effort. So
Customer
you
has to do
obviously
their
can't
part.
stop paying your car
Right.
and expect for your credit score to go up. So you have to, continue to pay your bills on time. We'll take care of the negative stuff, the stuff that's already, affected you and is on your report. That's what we'll work on. We actually give you personalized credit counseling. We give you something that we call an action plan. It's designed specifically for you. So that way it's a holistic approach to credit repair, right? We're working on your credit as a whole. And as long as you follow that plan that we give you, then it is guaranteed that it will work in 6 months or less.
Okay, so from your standpoint, what is a good credit score or a good margin from this score to that score that, in your experience, what lenders or mortgage lenders and things like that, what is considered a good score?
So it varies. But honestly, the target, especially for home approval, which is again what we specialize in, is 620. There are programs where you can get approved a little bit lower than that, like at a 580. But 620 is really like what lenders like to see,
Sure.
at least that. So that's what we guarantee. Now, when you start talking about like what's good credit and getting better interest rates and things like that, then there's several brackets. And like you were saying that you were trying to play with your credit card so that you could jump up a bracket.
Right.
So the first bracket would be from about 620 to 680. And then like a 680 to a 720 around there, 720 to 750, they go in brackets like that. So I would say 680 and up is
Yeah,
considered
really good.
really good.
Yeah, and from where I stand, it's, you know, from a manager standpoint and taking applications, we're looking at putting them to a totally different lender, not just a different program, but you know, if your high or your mid score is at a 625, well then you're gonna qualify for this lender and this lender. But as your score goes up, then you have more options open up for you where you can send it to multiple lenders that offer the lower rates, the better programs, you know, and that's going to affect whether or not you're approved based on down payment, 5%, 10%, 20%, things like that. And some lenders just want, you know, the higher credit from 680 on up.
Right.
So I had asked you, you know, what you've seen in your biggest improvement that you've shown, and you said it was from high fives to low eights.
They were about a 580 something to an 802.
Okay, so what is your you know, just to give these guys some hope, you know, because that's what we want to do is provide some hope. What is the lowest scores that you've seen true success?
The lowest is somebody recently, actually, which was another Palm Harbor customer, went from the 400s, she was at about a 470 to a 709.
Wow, and that period was 6 months.
That period was 6 months.
That's great. Okay, well, fantastic. Well, that should tell us everything right there, because that provides hope for everyone, because you know, most times you can't even get much lower than that as far as credit score. We've seen it.
We've seen it.
We've seen it.
We've
but
seen it.
you know, it could be for anything. You know, again, back to life happens, right?
Right. Exactly.
So, you got anything else you'd like to share?
You know, I just wanted to touch on, you know, you're talking about how once you are in the higher credit score that lenders, you know, have more options for you. And it's almost like lenders compete over you, because at that point you're highly credit worthy. So it's just a beautiful thing to realize that some people go from constantly being told no because of their bad credit, then they make the positive decision to change that, and then once they finish the program and they end up in, you know, 680 plus 700s, then they have people competing over them.
Right.
So from going from one end to the other is a beautiful thing, and it's something that's doable.
Well, we've had Travis, Dylan, that work here in this office in Huntsville, enter your program.
That's
so
right.
Tell us just a little bit, and we'll do another video. I'd love to have you back and do this again and get their story, but tell me the timeline and the success from either of those.
Yeah, so Travis, in just one round of disputes, so the reason that it's a 6-month program, it's 3 rounds of disputes, and each round is 2 months long. So in just one round of disputes, which is 2 months, he ended up in the 700s.
Wow. Wow, yeah, I know last year, you know, we were talking about getting a new truck, and he wanted to go with a used one, and it's kind of uncomfortable situation, but he was going to accomplish the goal. And then we talked about, you know, entering your program. I remember when he asked me, and I said, you know, from just from looking at it, you can't hurt it.
Right.
Okay, and she's got the guarantee, and you know, he swears by it. So I'm sure you're getting a lot of customers from him. Then Dylan came because he saw the success. So we've seen it firsthand. We appreciate what you've done, and we're looking forward to doing more. You know, I just want to add, I know we told you about our platforms that we're going to put this on. So the plan is to put this on YouTube and kind of start a regular thing to where we not only give information from you about how to fix credit or manage credit or take care of credit, things like that, but we're also going to do things with lenders and get them to kind of talk about from their position on what they look at specifically to get into housing. So we want to do this a lot more. We appreciate it. We enjoyed having you, and we look forward to doing this again. I sure hope you are.
Thank you so much, Trey. I've really enjoyed being here. I love being a resource for your customers, and I look forward to being here again.
Okay, so that's it. I want to thank everybody for joining us and watching. Please like and share our videos. We're going to do more. We're going to have Karina more, give you some more success stories, and give you more information. If you have any questions, you can reach out to us at our Homes of Conroe platforms, whether it be on Facebook, Snapchat, Twitter, Instagram. Just be sure to like, share, and follow. Thank you.